The number one way to not only build wealth, but to save big on taxes, my friends, is literally through real estate. In this video, I am going to give you 3 real estate strategies to choose from that is going to allow you to increase your profits in this crazy housing market. Before we jump in, do not forget to like, comment, and subscribe so you don't miss out on any wealth building information. Now, let's get after it. The number one strategy that I am going to give you is to set your real estate up like a business. Many of you may be thinking, hey, Carla, I'm already operating my real estate. I'm getting my rents. I'm doing well. But we really want to maximize your real estate deductions. And in order to maximize your deductions, we need to set you up like a business. And so what does that mean? That means that I want you to create an entity around your real estate. That means that you're probably going to set up a single member LLC. If it's just you. Obviously, if you have partners in your real estate, we need to look at a multi-member LLC. But I want you to set your real estate up in an LLC. Establish a business. Go out to the Secretary of State, get a name, get an EIN number, go open up a bank account, and start having those rents go into that bank account that's earmarked specifically for that particular business. Why do I say that? Because once you establish a business, now you can write off other deductions that may be associated with your real estate, but might not be directly associated with your real estate. For example, your car expense. For example, your internet connection. For example, your home office. These are things that will allow you to get a bigger write-off, lower the actual profit on paper, not in your pocket, and this is really going to help you. So the first thing I want you to do is I want you to formalize your real estate business by setting up an LLC. The second strategy that I want you to utilize is accelerated depreciation. When you purchase a large asset like real estate, you put down money, you probably got a loan at the bank, or maybe you come from a really wealthy family and you just cashed out the deal. I don't know, that's not my situation, but who knows, right? When you purchase property, when you purchase real estate, there is a separation between land and building. The building component, the IRS allows us to write off over time. When you can accelerate that write-off, that means you're getting a bigger deduction now instead of later. So the way I want you to think about it, I owe you $10,000. Do you want me to pay you now? Or do you want me to pay you later? Would you prefer to have your money now or later? Money in the hand now is worth more than money later. Therefore, if you are able to use accelerated depreciation to be able to get more of your deductions now, that means you're going to get more cash in your pocket now that you can take and reinvest in some additional real estate, that you can go and rehab, upgrade your real estate. So utilizing accelerated depreciation is mission critical. And one of the ways that you can utilize accelerated depreciation is by doing a cost segregation study. I want you to understand that terminology. I will even do another video to talk about it, but I want you to understand cost segregation study, because this is where you literally can go out, hire somebody to look at your real estate, and it will allow you to really accelerate your write-offs and get a bigger write-off now. Because the key is we got to allow every single day that we are earning income, we got to take care of the expenses associated with that income today and not be concerned about tomorrow. So your number 2 strategy is making sure you use accelerated depreciation. The third strategy is using your real estate as a short-term rental. Now, what I like about the short-term rental strategy, STR, is you don't even have to own the real estate to do short-term rental strategies. You could go out literally and rent someone else's property, and you can do short-term rental. Of course, there's rules and all of that, so you got to vet that out. But you can get into real estate really easily with the short-term rental strategy. But let's say in our particular example, you actually own the real estate. When you do short-term rentals and you are giving extra services, not just making the rental property available to the person to rent for 24 hours or 48 hours, but you have to actually be adding considerable additional services. Maybe you're allowing them to have Ubers pick them up. Maybe you're allowing them to actually book their restaurant reservations. You're doing extra services like you would in a hotel. If you go to a fine hotel and there's a concierge, they'll book your Ubers, they'll book your transportation, they'll book all of your restaurants, they'll book your spa services, they will do everything for you. If you're adding considerable extra services, perhaps it's Netflix, Prime Video, extra services in addition to the rental, you have taken that rental property from a passive activity to an active activity. Why is that important to you? What's important to you is you will no longer be limited on your real estate losses. Right now, depending on your income, you're limited on the amount of real estate losses that you are able to utilize to go against other income on your tax return. People that are really growing wealth, people that are really amassing a lot of real estate, you know what they're doing? They have income coming from other sources, income from W-2s, income from businesses, and they're using their rental losses to offset their other income. And one way to do it is to utilize the short-term rental strategy. That is such an excellent tool for anybody that is really needing to reduce their taxes, really needing to aggregate additional expenses to drop that overall tax bill. When you are holding real estate, you understand that your income is coming from rents. You also understand that the majority of your expenses are coming from your insurance, your property taxes, your repairs, and possibly your mortgage interest. However, what about getting in there your internet bill? What about getting in there your Netflix bill? What about getting in other expenses because you're starting to do other things and you're really optimizing it as an actual business? That's really the key. So I want you to understand the 3 keys to building wealth and utilizing strategies are: create a business around your rental property. Form that LLC. Accelerate that depreciation. Look into a cost-seg study. And look into doing the short-term rental strategy. I guarantee you, when you do, you're going to put more cash in your pocket. You're going to be able to amass more money quicker, and you're going to be able to go out and purchase more real estate sooner rather than later. And you guys know my mantra: when you know better, you absolutely have to do better. That is literally why I want you to like, comment, and subscribe so I can keep you updated on all things business and tax.